Bitcoin just hit a massive milestone that nobody saw coming, and what happens next could change everything for crypto investors. Welcome back to Crypto Insights, where we break down the most important Bitcoin news, predictions, and analysis you need to know. Before we dive into today's explosive Bitcoin updates, make sure to hit that subscribe button and ring the notification bell. New subscribers this week get access to our exclusive Bitcoin trading guide absolutely free. Now, let's get into the 5 crucial Bitcoin developments that are shaping the market right now. First, let's talk about Bitcoin's current price action and what the charts are telling us. Bitcoin is currently trading at levels that haven't been seen since the last major bull run, with technical indicators showing strong momentum. Trading volume has increased by over 200% in the past week, indicating serious institutional interest. The weekly candlestick patterns are forming a classic bullish formation that historically precedes major price movements. What's particularly interesting is the consistency across all major exchanges, suggesting this isn't just isolated market manipulation. The Fibonacci retracement levels are aligning perfectly with our current price action, giving us clear targets for the next move. After a period of consolidation that has tested the patience of even the most seasoned investors, the crypto world is buzzing with anticipation. Leading analysts, from Wall Street veterans to crypto-native pioneers, are making some incredibly bold predictions about where Bitcoin's price is headed in the near future. The consensus? We could be on the verge of a truly historic move. At the forefront of the bulls is Michael Saylor, the CEO of MicroStrategy, a company that has famously staked its treasury on Bitcoin. He predicts Bitcoin could surge to $150,000 by the end of 2024. Saylor's thesis is straightforward. He views Bitcoin as digital property, a superior store of value to almost any other asset. He argues that the recent launch of spot Bitcoin ETFs has opened the floodgates for trillions of dollars in institutional capital to flow into this scarce asset, creating a demand shock. But other analysts are even more bullish. Cathie Wood, the founder of ARK Invest, has a long-term target that sees Bitcoin reaching over $1 million per coin, framing it as a key asset in the ongoing technological and financial revolution. These predictions aren't just wishful thinking. They're rooted in concrete data. And the most significant piece of evidence is the unprecedented success of spot Bitcoin ETFs in the United States. Since their launch, these products have seen tens of billions of dollars in net inflows, forcing issuers like BlackRock and Fidelity to purchase enormous amounts of Bitcoin directly from the market every single day. This represents a completely new, persistent, and price-insensitive source of demand. Beyond Wall Street, we're seeing growing adoption at the national level. While El Salvador's move to adopt Bitcoin as legal tender was initially met with skepticism, it has provided a real-world case study. The nation is leveraging Bitcoin to attract tourism, investment, and provide financial services to its unbanked population. Now, citizens in countries battling hyperinflation like Argentina and Turkey are increasingly turning to Bitcoin as a vital tool to preserve their wealth against currency debasement. This brings us to the core of the bull case, the supply shock. The demand from ETFs is colliding with Bitcoin's unchangeable hard-coded scarcity. There will only ever be 21 million Bitcoin. With a significant portion held by long-term believers who refuse to sell, the amount of available Bitcoin on exchanges is dwindling. This creates an intense supply squeeze, where a massive new wave of demand is chasing an ever-shrinking pool of available coins. And the final explosive ingredient is the Bitcoin halving. Approximately every 4 years, the reward for mining new blocks is cut in half, effectively slashing the rate of new supply. Historically, every single halving event has been followed by a massive bull run. But this cycle is unique. It's the first time a halving has occurred while institutional demand is already at a fever pitch. A pre-programmed supply reduction combined with a demand explosion could create the perfect storm for a price surge unlike anything we've ever seen. The regulatory landscape for Bitcoin is shifting rapidly, with pivotal developments in the United States and the European Union. In Europe, the comprehensive MiCA regulation is creating a unified legal framework, providing clear rules for service providers. This contrasts with the United States approach, where agencies like the SEC and CFTC are defining the rules of the road, creating a complex but evolving environment for digital assets. The most significant breakthrough has been the SEC's historic approval of spot Bitcoin ETFs. After a decade of rejections, this decision was a watershed moment, providing the regulated, familiar investment vehicle that institutional capital was waiting for. This built a secure, sanctioned bridge between traditional finance and the digital asset ecosystem, finally legitimizing Bitcoin in the eyes of Wall Street's most powerful gatekeepers. Consequently, major financial institutions can now offer Bitcoin services with full regulatory compliance. Through the ETF structure, a bank provides Bitcoin exposure while specialized digital asset custodians handle the underlying security. This separation of duties within a regulated wrapper is crucial. It allows traditional players to participate without building their own complex custody infrastructure, dramatically lowering the barrier to entry and ensuring a secure environment for investors. This regulatory clarity opened the floodgates for institutional money. Titans like BlackRock and Fidelity dove in, launching their own ETFs. Their participation is a monumental vote of confidence, signaling to hedge funds, pension funds, and corporate treasuries that Bitcoin is a viable asset for diversification. This has also democratized access, allowing millions of retail investors to gain exposure through their existing brokerage accounts, backed by the most trusted names in finance. The US approval is creating a powerful domino effect globally, as financial hubs now compete to become crypto-friendly. Hong Kong quickly followed suit, approving its own spot Bitcoin ETFs to capture Asian market demand. Jurisdictions like the UK, Singapore, and Dubai are also refining their frameworks to attract investment. This global trend towards regulatory convergence is building a more stable foundation for Bitcoin's future, promising reduced volatility and cementing its role in the modern investment portfolio. The narrative around Bitcoin is undergoing a seismic shift, moving far beyond speculation and into the heart of corporate strategy. We're witnessing corporate adoption accelerate at an unprecedented pace, but this isn't just a trend, it's a fundamental rethinking of treasury management. In an era of persistent inflation and currency debasement, forward-thinking companies are no longer just considering Bitcoin, they are actively integrating it into their balance sheets. They see it not as a fleeting digital curiosity, but as digital gold, a superior store of value and a crucial hedge against macroeconomic uncertainty, marking a pivotal moment in financial history. Perhaps no company embodies this conviction more than MicroStrategy. Led by their visionary CEO Michael Saylor, they have made Bitcoin their primary treasury reserve asset, investing billions and even taking on debt to acquire more. This isn't a passive allocation. It's an aggressive, conviction-driven strategy that has effectively transformed their company into a proxy for Bitcoin investment on the stock market. Their pioneering move created a playbook for other corporations, demonstrating how to leverage Bitcoin as a core component of a company's financial foundation, with Tesla and Square following suit with their own multi-billion-dollar investments. But institutional adoption isn't just about hoarding Bitcoin, it's about making it useful. Payment giants like PayPal, Visa, and MasterCard are building the bridges between traditional finance and the digital economy. By enabling Bitcoin transactions for hundreds of millions of users worldwide, they are unlocking a new level of utility and mainstream acceptance. This is powered by advancements like the Lightning Network, a second-layer solution designed for instantaneous, low-cost payments, finally solving the scalability challenge and making Bitcoin viable for everything from a cup of coffee to cross-border remittances. The most significant catalyst for institutional adoption, however, has been the landmark approval of spot Bitcoin ETFs in the United States. This was the watershed moment Wall Street was waiting for. For the first time, massive institutions, pension funds, and everyday investors can gain exposure to Bitcoin through a familiar, regulated, and highly liquid investment vehicle. The launch of these ETFs, backed by financial titans like BlackRock and Fidelity, saw record-breaking inflows, demonstrating the colossal pent-up demand for a secure and straightforward on-ramp to the world's premier digital asset. Underpinning this entire movement is the rapid maturation of Bitcoin's core infrastructure. The network has never been more secure, with its hash rate consistently reaching new all-time highs. Mining operations are expanding globally and becoming more transparent, proactively addressing environmental concerns by migrating to renewable energy sources, which now power a majority of the network. Crucially, professional-grade custody solutions have emerged, giving institutions the regulated and insured security they require. This robust and ever-evolving ecosystem makes it easier and safer than ever for the next wave of capital to participate. Looking at the short-term outlook, all major technical indicators are pointing toward continued upward momentum for Bitcoin. Market sentiment has shifted from extreme fear to cautious optimism, creating ideal conditions for sustained price growth. Bitcoin's decreasing correlation with traditional markets suggests it's finally maturing as an independent asset class. Long-term projections suggest Bitcoin could reach $500,000 per coin by 2030 if current adoption trends continue. The stock-to-flow model indicates we're entering a phase where Bitcoin scarcity will drive exponential price appreciation. Some experts believe Bitcoin could eventually challenge traditional reserve currencies as global monetary systems evolve. Let's quickly recap the 5 crucial Bitcoin developments we've covered today that are shaping the market. First, Bitcoin's technical analysis shows strong bullish momentum with increasing institutional volume. Second, leading analysts predict significant price appreciation based on adoption trends and market fundamentals. If you found this Bitcoin analysis valuable, smash that subscribe button and hit the notification bell for daily crypto updates. Next week, we'll be diving deep into Ethereum's upcoming upgrades and how they could impact the entire crypto market. Thanks for watching, and remember, always do your own research before making any investment decisions.